Hi everyone, and welcome back to my YouTube channel. For those who are joining me for the first time, on my channel I like to talk about investing, personal finance, and basically how to accomplish financial freedom, financial independence. I'm not a professional finance advisor. This is just videos that I create to follow me on my journey to becoming financially independent, to be able to retire early, because really that's my goal at the end. I have promised in my previous videos that I'm gonna start doing analysis of the stocks that I own or stocks that I'm interested in, and today for the first time I will do just that. I'm going to analyze Microsoft, which is the stock that I did purchase not that long ago, and I do believe it's a good stock to purchase in right now, as it has very good potential, and I'll deep dive into it later in the video. But before I do that, I actually wanted to ask you to click the like button and subscribe so that you don't miss my future videos. It would really help me out. Yes, I'm waiting for you to actually click the like button. Alright, thank you. Now we can continue. Before we start talking about Microsoft, I actually wanted to kind of talk a little bit about what I have learned in regards to investing during the COVID. Basically kind of what happened a year ago when the stock market crashed and the whole thing. In the past, I quite often would pick companies that pay high dividend without paying too much attention to what possibility of them cutting that dividend. To give you an example, I owned Ford. Even though I did know that it's a very cyclical company. Every few years they're doing very well, and then things turn around, economy turns around, or the whole automotive industry, and they go down. The sales are down, they could be even negative for a while, and it's constantly up and down. When I did purchase Ford, I did look at their income statements, and they were making enough money, more than enough money to pay dividends, even if things turn negative for a while. So I didn't really worry too much about it. Why did I like Ford? Well, because they were paying 5% dividend. That's quite a lot. So what happened during COVID? Well, a few months into it, Ford simply cut their dividend. Even though they were still making money, there was really no reason for them to do it. They just wanted to play it safe. And that actually wasn't the only bad part about it. Because they cut dividend, and a lot of investors purchased it because of the dividend, their stock value dropped as well. It actually dropped quite significantly. And what that means for somebody like me is that, first of all, I don't have any more the passive income that I expect from them, and second, I can't even sell them. I believe they dropped about 40%, which means on $1,000, if I would sell them, I would only get 600. And so that made me thinking that I should try to actually avoid those type of companies. I should really purchase companies that make money more or less in any environment. Whether economy good or bad, they still make money. And there's tons of companies like that. Obviously, their dividend is not as high because everyone wants it. But I think in the long term, it's actually worth it. Also, I kind of been rethinking the whole situation about being 100% invested in a stock market. A lot of books tell you to do that. I mean, there is such thing as dollar cost averaging, which basically the idea is you buy at specific intervals, same amount, whether the stock goes up or down, and you just keep investing all the time, and hopefully you end up on top. But the problem with that is most of us end up investing all of our money, and we don't have anything for cases when the stock market crashes like it did a year ago. Now, even though a lot of books do tell you to just keep investing everything you have, and just, as the money come in, dividends come in, you reinvest it. Let's look at the actual example. Let's look at someone like Warren Buffett. I'm sure a lot of you know him. He's basically the most famous investor who averaged over his lifetime to return 20% yearly. He doesn't follow this rule whatsoever, not even close. Currently, he's sitting at $140 billion in cash, or almost 33%. Just imagine, $140 billion in cash. Why is he doing that? Because at this point, the stock market is very high and he simply cannot find anything to invest in. Sure, there are some smaller companies that might be undervalued, and they're simply too small for him to invest, but overall he doesn't actually see anything worth investing at this point. And we can actually go back a little bit to 2008, 2009, to the financial crisis, when lots of banks were running out of money, lots of companies. That's when Warren Buffett actually made a lot of money. He came in, he invested $15 billion because he actually had liquidity, he had cash, and he made $10 billion on that investment. Not bad if you ask me. So I'm actually going to try to do the same thing. I'm going to stop investing every time I have enough to purchase another stock, make another purchase, and I'm going to try to keep 10 to 15% in cash balance, just in case something good comes along. And to be honest, at the current evaluations, with the PE ratio, average PE ratio of S&P 500 standing at 35, I think there's a good chance that things will crash. Because let's be honest, at this point, the stock market doesn't make too much sense. People still out of work. There's COVID raging all across the globe. They're talking about the fourth wave, the Delta variant and stuff, and the stock market at basically all times high. Well, what's keeping it? Yes, there's a little bit of inflation, and that's why people put the money into the stocks. But at the end of the day, you need to look at what are those companies making. Are they more profitable? No, they're not. That's why their PE ratio went up from 25 just a few years ago to 35. Well, at one point that has to end, right? And things will go back to the norm. So yes, I'm going to keep about 10 to 15% in cash. I don't think that will really affect all that much my profits, but it will give me the opportunity to scoop up some good deals if they come along. And that's not actually maybe just if stock market will crash. It might be simply that one company may run into trouble, but it may not be something serious, right? Because quite often investors overreact. Now, let's go back to Microsoft. Microsoft is a company that I have purchased at the end of December 2020. So it's been around 7 months. In 7 months, it went up almost 30%. It's a pretty good return if you ask me, considering, like I mentioned before, Warren Buffett averaged 20% a year. Now, why did I purchase Microsoft? What made me do that? Well, let's look at a few things. First of all, without even looking at their finances, let's just talk about Microsoft a little bit. What do they do? Well, Microsoft was found based on them creating operating system for PCs. And since then, they had monopoly. Yes, there is other operating systems like Linux, but most businesses use their desktop operating system and their Windows Server operating system. And that's kind of why I decided to invest in them, is because I actually know something about this. I don't know how many of you read Intelligent Investor. That's a book written by Benjamin Graham, and he's the guy who was a tutor to Warren Buffett. Obviously that was a long time ago and the book is pretty old. The thing is, some things don't really change much, right? So the same principles that were applied 80 years ago, they can still be applied now. One of the things that that book actually mentions is that you should try to pick stocks that you understand what they do. And Warren Buffett quite often talks about it, right? That's one of the reasons why when dot-com bubble happened and burst later, when stocks were going up, everyone was actually making fun of him that he wasn't investing in those internet stocks. And he gave a very simple answer, is that I don't understand how they make money. I don't understand anything about it, so I'm not going to invest into them. And guess what? At the end, he ended up being right. Yes, some people made money along the way, but you know, it's like a lottery, right? I mean, you can buy a lottery ticket and win it too. Does that mean you're smarter than everybody else because you actually won the lottery? No, it's luck. Whereas he doesn't really believe in luck. He actually applies mythology, specific mythology, and picks stocks based on specific conditions. And so that's why I decided to look at Microsoft. To be honest, I have no idea why I didn't purchase it earlier, because I remember for years I would talk to my friends about how Microsoft has a monopoly, yet for some reason I didn't even think about buying it and owning a small piece of it. And that's another thing that Intelligent Investor book talks about, is purchasing stocks, for example, that have some kind of monopoly in the area or make it very hard for others to come in. And so let's look at Microsoft. They have complete monopoly. Nobody else can just come up with another version of Windows. Beside Windows operating system, they also have Office productivity suite, which also a very big part of their business. Most offices use Microsoft Office. Now they move towards the subscription model, which I also have some experience with. Because I work in IT, I actually see it every day. As a matter of fact, at my work, we had Microsoft Office 365 subscription. Then about a year and a half, right around the time when COVID hit, Microsoft pushed Microsoft Teams to everyone's computer. They basically gave us 1 year free subscription. Obviously, what happened? People started using it, got used to it. Then a year later, we simply couldn't get rid of it because people used to it. So we had to change our subscription and actually start paying for it. Our payments went from $16 a month for one user to $28. And if you look right now at how they make money, cloud services and Office 365 is a huge part of that, and it just keeps growing. Another big chunk of their income comes from gaming. I didn't even know that. But the cloud service is growing at a mind-blowing rate. Also, something that I've heard a few years back is that Microsoft is only one of 2 companies in the United States that have AAA credit rating. That's actually higher than the US government. Just think about it. The only other company that has a AAA credit rating is Johnson & Johnson. So here's a few graphs to illustrate my point. Here's their revenue by product. Here you can see the revenue growth in the cloud segment. Here you can see their dominance in the desktop operating system market. So let's look at their dividend history. As you can see, they have increased dividends on average 10% every single year. And that's beside their stock buyback. Okay, so let's look at their financial statements. Let's look at their income statement. You can see their gross profit for the last 4 years went from 72 billion, even though it looks like it's in millions, it's actually right here you can see it says all numbers in thousands, so it's actually 72 billion. So it was 72 billion, the next year it was 82 billion, then it was 96 billion, and then it was 115 billion. So you can see the growth is just phenomenal. Let's look at their balance sheet. The lines I like to look at is total assets versus total liabilities. Here you can see that their total assets are $333 billion. The total liabilities are $191 billion. That means that if the company simply stops making money right now and they simply sell everything they have, they're actually going to have about $140 billion cash. There's not a lot of companies out there that can say that. And that's one of the reasons why they have a AAA credit rating. Let's look at their cash flow as well. For the last 4 years, you can actually see that their total free cash flow been increasing from 32 billion to 38 to 45 to 56. I mean, the increase from previous year to this year, 20%. The previous years, it was 15%. So without even COVID, you can tell that they were making very, very good money and they were growing rapidly. So taking all those things into consideration, I thought it would be a very good company to invest in. Yes, they currently don't pay very high dividend because a lot of people see value in this company and they want to own it. But since I'm in it for the long term, I think I will get very good return on investment. And so far this year, in 7 months, Microsoft went up 30% for me. And I'm just looking for opportunity to buy a little bit more of it. Microsoft is definitely one of those companies that I want to be one of the biggest holdings in my portfolio. And on that note, I'll end this video. Once again, if you like it, please click the like button and subscribe to my channel. Next week I'll try to make another video analyzing another one of my stocks that I own and just tell you my thoughts on it and the reason why I bought it. Thanks and take care.